and welcome to Finextra. I'm Hannah Wallace and we're here at EBAday 2018 in Munich. Joining me now is Raj Venkatraman and Dominique DeConinck from IBM. Good morning, how are you both?
Good morning,
Great,
how are you?
Thank you. How are you?
Fantastic. I hope you're enjoying the event so far.
It's been great, yeah.
Now, Raj, coming to you first. We're going to talk about the impact of regulation and the launch of new payments within the ecosystem, and there's no doubt this has sped up the pace of change within the global payments ecosystem. So would you say that having a finely tuned payments hub is enough to keep up with the pace set?
Simple answer, no. It would have been a lot simpler if it was yes, but that isn't the case. This is largely due to the fact that client requirements are driving this change. While there's regulation that's coming in on the back of that, clients in this day and age of instant gratification are looking for visibility, transparency into their transactions, speed, and last but not the least, secure transactions. So clients that have legacy infrastructures, legacy technology, it's quickly getting to end of life in being able to cater to all of these newer client requirements. So solutions like ours, IBM's FTM for Financial Transaction Manager, provides modular solutions, so that helps clients get started and build based on their strategy and their growth trajectory, and also helps align with the different payment schemes that they need to cater to, depending on the countries they operate in, and provide that and align with their overall growth strategy. Banks are quickly realizing that there's very little immediate ROI in providing immediate payments functionality to their clients. However, if done right and with the right investments, that's a huge competitive differentiator. One of our larger clients has implemented our solution and seen over a 30% reduction in total cost of ownership. They were able to onboard customers they went from months to a matter of days in being able to onboard clients. So you think about from a client experience in overall client satisfaction and efficiency of their business, tremendous ROI, right? The last item on this question is around being able to take advantage of some of the more recent advances with technology gains like artificial intelligence, augmented intelligence, and machine learning. And legacy infrastructures, again, quickly get to a point where they're not going to be able to extend to take advantage of all of this. So answer is no, but there are tremendous benefits to making sure you have a industry aligned with industry standards like ISO 20022. You're aligned with the different payment schemes worldwide. Like in the US, you have the clearinghouse as well as Zelle. So the clearinghouse is the RTP scheme, and then Zelle is the peer-to-peer scheme. And banks are having to cater to both those schemes. And being able to extend, being able to offer those services out, quick time to market is becoming a key competitive differentiator. So you need a state-of-the-art engine, a state-of-the-art hub that sits at the heart of your payments business.
And now, Dominique, following on quite nicely from that, what role would you say artificial intelligence and, in IBM's terms, augmented intelligence play in bringing about new services and new values to the payments business?
Yeah, on payment transactions, we have been integrating augmented intelligence and machine learning for quite some time to be able to augment the payment experts and really make sure we provide them with the necessary insight, both in the different payment schemes that he was referring to, as just providing the necessary speed. So critical to us on integrating this augmented intelligence and machine learning capabilities is speed, openness, and integration towards new processes and new services. I'll come back to it. So on speed, we know that behind it, you referred to it, really customer satisfaction is increasing every day, and speed, today we process the transactions in milliseconds, identifying the fraud patterns in milliseconds, that's how what we offer to our customers today. So, and it's acting on in milliseconds on tens of billions of transactions. So speed is really critical. The second area where we focus on integrating augmented intelligence and machine learning is openness, because we want to enrich all of the data insights that we have to be capable to detect fraud based on all the information that is available. So it starts with a white box approach on our own methodology and rule set, being able to share also the insight that we get on identifying fraud in the transactions. It also extends to integrating other payment fraud systems that customers may have deployed because of the different payment schemes they have, and because they might have already implemented some card for transaction systems, integrate that insight into the overall counter-fraud approach that we are having. The third one is really integration, to be able on what we want to do today in our roadmap, and what we are offering already today is transitioning from identifying fraud in payment transactions to identifying criminals. And that really helps augment the experts today in the bank's organization, to provide them with the insight on beyond the transactions. Who is who? Who knows who? Who knows what? Or who is doing what? And that then, combining with layered analytics, allows to come to really a behavior approach, identifying behavioral analytics. And when you combine that with also being able to document and report all of your findings, you then really come to an AML 2.0, how we name it, approach, really augmenting the capabilities that the experts in the banks do have.
So Dominique, the point you made around fraud detection and the speed, etc., we know from a decade ago when we launched immediate payments in the UK, online fraud doubled within 6 months of it going live, right? So think about, we're coming into a world where there's adoption of the real-time payments, immediate payments globally, and so we know what to expect. Coming in this time, we know what to expect. We're still sitting in a world where most banks are experiencing somewhere between 95 to 98% false positives. So
At
you
least.
think about, and if you put that metric and you use that lens in what should be an instant real-time payments world, you're going to get into banks struggling with how to satisfy customers and make sure they're catching the right transactions and making sure it doesn't slow the system down. So both from an efficiency, from a effectiveness, and having the in terms of the investments they need to make just to take care of these false positives, I think there's a huge challenge that they need to overcome. And I think some of the newer technologies like augmented intelligence, the technology, as well as the people within the banks working together, I think drives that efficiency through.
All right, and coming back to this shift in digital experience, can you tell me, what is IBM doing around open banking?
With the advent of PSD2, which is Payment Services Directive 2 here in Europe, where it's a regulatory mandate going forward, all banks over the last couple of years have known this is coming and have had to do some serious soul searching about. We've gone from talking about disruptors and fintechs coming into the banking system to starting to integrate with them. So banks are very quickly having to transition from having their customers, their data, and having access, one-on-one access to them, to starting to allow third parties into this ecosystem. So it's a major shift. And in order to be able to do that, they've got to be flexible. They've got to be able to have these connections built in such that these third parties can integrate with their platforms. So exposing APIs and having a strategy about how you work with this ecosystem is critical. Most of the clients we've spoken to will put up their hands when it says, what are you doing about APIs and how are you producing these APIs? And everyone says, yes, we're doing it. But if you think about a concrete strategy around managing those APIs, making sure there's a discipline around it, and that, i.e. standards within the enterprise, and last but not the least, how are you tracking all of those efforts into an ROI that aligns with the bank's strategy? That becomes the holy grail. So our solution has the ability to provide a sandbox environment with a developer's toolkit. So essentially empowers the developers to create these APIs aligned with a certain discipline, a certain standard that is implemented by the enterprise, and starts to provide faster time to market. And that's critical based on the speed at which clients require, as in the banking clients require that, and the speed that fintechs are used to working with.
And that's a key point, I think, Raj, because what we see today is leveraging those APIs, and we see it's not only today about managing data and sharing data, it's really about creating new services. And this APIs movement has allowed us now to approach more sharing of data between banks and support, again, augmenting the experts in that logic of AML 2.0 and come with, support to customers to build consortiums, sharing data on KYC, on AML, and that's really, delivering new capabilities and reducing also operational costs for bank if they can share, those data and those processes they are facing today.
Yes, it's certainly an exciting space to be looking out for. Dominique, Raj, this has been great. Thank you very much.
Thank you, Hannah.
Thank you.
Thank you.
And thank you for watching.